So far this week, we've seen everything coming up roses. What I mean by that is bad news has been interpreted as good news, which is actually a bullish signal for the market. We're gonna have to see if this carries on. So far, what we've seen this week, on Monday, we saw the Empire Manufacturing Index come out. It came in at negative 31.8. That is a huge negative number. Now, what's important is, compared to the expectations of negative 3.8, now that's a huge miss, and that indicates manufacturing weakness in the economy. But the market was still positive on Monday, and we also saw the Fed Governor Bostic come out and say that, he can actually see rates move higher later on this year. He doesn't see any cuts at all. So that was kind of interesting as well. The market took that all in stride. In fact, this week has been very heavy on Fed governors speaking, and they've all come up with a very hawkish message. The market hasn't cared. Like I said, everything's been coming up roses so far. And we saw on Monday the S&P 500 was positive. Then on Tuesday, we saw a couple of announcements. First of all, for the Canadians, we saw the inflation rate come in at 4.4%, which is higher than the expectations of 4.1. Now that might affect the housing market a little bit longer because people were waiting for that inflation rate to go down so the Bank of Canada can be more dovish and perhaps lower rates quicker. But at 4.4%, that puts pressure on the Bank of Canada to at least continue to hold for quite a while here. The big news really on Tuesday was Home Depot. It came out with earnings that we saw the revenue miss was the largest in 20 years. They said that consumers have been cutting back on their projects, reducing the size of their projects. Lumber costs dropping have hurt their revenue as well. That was a huge miss. We did see Home Depot down on the day, but guess what? It was up on the week. That's huge. Yeah, that just shows you how bullish this week was for the market overall. On Wednesday, we saw Target come out with earnings, and investors really want to get a good feel for the retail sector and what was going on. And well, overall, Target, it was down on Wednesday, and it was down for the week as well, but it didn't really have an impact on the market overall. And on Thursday, we saw the Walmart come out with strong earnings, strong revenue, which helped to boost the stock, and also as well the overall market. So far this week, we've seen the S&P 500 up 1.8%. That's huge. It's mainly on the back of two positive days, Wednesday and Thursday. So we had two positive days in a row. And so far, if we take a look at the futures for Friday morning, the market hasn't opened yet. If we take a look here, we can see that if we hold that up there, the futures are positive, slightly positive for the market. So we might actually get the 3 days in a row for the S&P 500, which we haven't had in a long time. The last time we saw 3 days positive for the S&P 500 was late March, towards the end of the month, and we saw that rally, and then in April we saw it pull back a little bit as well. So far this week, the sectors of the market that have really performed well have been the growth sectors, consumer discretionary, the communication services, and technology. Those sectors have performed particularly well. The defensive sectors are actually negative for the week. So what we're seeing is a rotation from defensive sectors into the growth sectors of the market. Now, that's actually bullish for the market, particularly since we've seen the yield on the 10-year Treasury note climb every single day so far this week. So far this week, we've seen a lot of Fed governors speaking, and we've seen a lot of hawkish comments, more hawkish than expected, basically. And the stock market hasn't cared. Really hasn't cared. The bond market has cared because we've seen that consistent rise of the yield every single day this week on the 10-year. Now, at 11 o'clock this morning, we've got Powell coming out and giving a speech, and he's in the past with his speeches has been more hawkish than expected and has really put a damper on the market. Investors have been expecting him to come out for 11 o'clock. They haven't really cared so far this week. We're going to have to see what happens, and maybe we will get that 3-day elusive gain of the S&P 500 being up 3 days in a row. We'll have to see what happens this week. Now, next week, the big news of the week, they'll probably drive the market because we're really finished the Q1 earnings, will probably be the FOMC minutes released on Wednesday. Now, like I said, the governor's speeches this week haven't really mattered, but we'll have to see if the minutes matter next week. And on Friday, we do see the core PCE, personal consumption expenditure index, on a month-over-month being released. Now, The Federal Reserve actually follows that much closer than the CPI for inflation. The month over month for the PCE is expected to come in at 0.3%. So those are the two big movers for next week. This week so far has been bullish. Today is the third Friday of the month, which means that we're in options expiry, which tends to be a volatile day in the markets overall, on average over the long term. And Monday, on top of that, on a seasonal basis, is what I call witch's hangover, the Monday after options expiry, which tends to be a negative day for the market overall, on average, over the long term. We'll have to see what's going to happen, because this week's being a very bullish action in the marketplace. We're just shy of that 4,200 number for the S&P 500. And maybe we will get that third day today of the S&P 500 up in a row, 3 days in a row. We'll have to see what happens, but we're seeing some bullish indications in the market. I'm not convinced that we're going to see a big follow through next week, but we'll have to see. Thank you very much. Let's get back to the desk before the market opens.